There's a lot of real estate agents, obviously, and a lot of investors out there that have videos on sites like this. They often talk about how to break down cash flow, how to do analysis on properties, or maybe more general concepts of why it's important to invest in real estate. Today, I'm here to talk to you about something a little bit outside the box, leveraging a small or medium business to purchase real estate investment properties. I know it's a little bit non-standard. More specifically, the franchise model is a fantastic way to quickly develop a strong income source with which to purchase real estate. Those two things can work hand in hand. Years ago, I invested in a franchise territory with a foundation company. I had no idea that under the franchise model, I would be able to execute a profitable business in the first year of being open. Of course, that's the goal for any new business owner. The franchise model is uniquely positioned to provide you the operations, sales, and admin support as a structure in a new business to ensure you're profitable as soon as possible. So let's talk numbers. If I make $1 million in gross revenue in my first year and have a 20% cash flow, very easy math here, I've got 200 grand to use towards real estate investments or any other types of investments. Some of you watching this video may say, that sounds like an astronomical gross revenue number for a small to medium business and a franchise, and a absolutely false cash flow number. And I'm here to tell you that actually every year that I've been open as a franchise owner, that those numbers are 100% realistic. And you're generating cash flow at a much faster rate than you would be slowly snowballing long-term rentals or short-term rentals into additional purchases. In fact, that cash power has allowed me to invest in several different asset classes, not just real estate investments. Now, numbers like I just talked about require a lot of due diligence on the front end before you invest in a franchise. And I would also like to point out there's some cons to the franchise model. Of course, you're paying royalties to the franchise. You have higher startup costs than perhaps opening your own business. You have to do things the way that the franchisor wants you to do them. But if you can get past all that and do effective analysis just like you already do on the investment properties you're looking at right now, you can find a business that's going to be functional for you. Let's go back to the cash flow number I used from the business. Good year, $200,000 in cash flow. What options for properties does that bring me? Well, quite a bit more than most real estate investors are used to. Most real estate investors are scrambling for creative financing, especially when they're on, kind of the mid-range of doors, maybe somewhere between 5 and 15 doors, especially if they're growing a short-term rental portfolio. Having $200,000 to leverage against a property allows you to get into a class of short-term rental that is directly correlated to not just the gross rents of that property, but also the cash flow from that property. Just another way these two things work hand in hand to allow you to grow a portfolio that is growing cash flow, not just doors. I see real estate investors fall into that pit all of the time, counting the number of doors they have instead of being efficient with the cash flow that they have. Now, a huge pro. Real estate investing and owning a franchise location can absolutely go hand in hand from a tax perspective. One can shelter the other quite easily. The cash flow numbers I just talked about, purchasing a short-term rental, for example, one example of many in which case this could work. Purchasing a short-term rental with that cash flow and still taking advantage of the bonus depreciation that's sunsetting with the IRS right now can allow you to relieve quite a bit of your tax burden, potentially all of your tax burden for that cash flow in the business. A question I would ask myself, Well, if I have a smaller medium business, I own it, I'm running it, I'm operating it. How do I have time to invest in real estate or do much of anything else? Well, your imagination is the limit. Owning a franchise can absolutely be something that is close to passive income. I'm not going to say passive income. You're going to attend franchise conferences. You're going to have to be involved at least in a weekly, monthly, or quarterly meeting with the staff. But you can absolutely build out your team in a way that it is as close to passive income as possible. If you're curious about how to do that or what that accountability chart looks like from a business perspective, my contact information is posted right below this video. Feel free to reach out. I'd love to discuss it. There's a lot of real estate investment videos out there. One thing Quiet Waters Realty Group is trying to do is be different and be useful to you. Stay tuned for more content as we move forward. Thanks so much for watching.